Good afternoon and welcome to the session on investing in India. I'm Kami Viswanathan, founder of Work 4.0 Capital and a member of the advisory board at GSV Ventures. And I'm delighted to moderate this terrific panel of investors that are right at the center of all the activity in India. We'll start with a quick round of introductions and then jump right in. Sam, if I may request you to get us started with an introduction, and then we'll go around the panel.
Good morning. Good, very early morning to California. My name is Subramaniam, and I'm the CEO of Brand Capital. Brand Capital is the strategic investment arm of the Times Group. Times Group is perhaps India's largest media conglomerate, and a very large one, the largest English newspaper company in the world, and has a massive portfolio of investments in brands. And a sizable chunk of that is in the area of education. All these are in the area where they're all Indian companies, primarily all of them targeted at the Indian market. There could be foreign companies targeting Indian markets as well, where we have investments over 800 companies in the portfolio. Several $1 billion in value, and it's been around 15 years. And I run the portfolio, and we made roughly in the past 2.5 years about $1 billion worth of new commitments into over 200 companies. So that is Brand Capital, and I run the portfolio.
Thanks, Sam. Dave?
Hi, everybody. This is Dave Khare. I'm a partner at Lightspeed in India. Lightspeed is an early stage venture capital fund, and we invest in internet and technology companies. In India, we've invested in a few companies in the education space, including Byju's, and we've done so in the US and China as well, where we've got operations. Looking forward to the panel.
Awesome. Karthik?
Hi, I'm Karthik Reddy, one of the co-founders of Bloom Ventures. We're about a 10-year-old firm. Started with a $20 million fund and recently closed a $100 million fund. We do seed to pre-A funding. Been believers in education in every cycle of these three funds. And we are one of the earliest investor in an academy. And then we've added a few more investments in the recent fund, in Fund 3, including Leverage EDU and Class Plus. Looking forward to the panel. Thanks for having us, Kami and Ace.
Terrific. Thanks for joining us. Sandeep?
Hi, I'm Sandeep Aneja. I'm with Kaizenvest. I started Kaizenvest about 10 years ago, which was then India's first private equity fund that focused on education only. We still are the only fund that focuses only on education. We manage $150 million. We've so far made 12 investments in India, and 1 in Philippines, 1 in Vietnam. And some of those investments you may have heard of. Topper is one of them, and a few others such as Barthana and Founding Gears. We invest in across the education chain, education technology being a strong component of that. Looking forward to a fun discussion with fellow investors. Thank you.
Great, welcome Sandeep. And finally, TJ.
Hi, my name is Tejeshwi. I go by TJ, and I'm a principal in the Sequoia Capital in India. We are a multi-stage venture capital firm with presence in India, US and China. And we are quite prolific investors in EdTech in India and China in particular. We have close to 12 odd investments or more in India. And I'm very excited to be a part of this panel.
Great. Thank you all for joining us. So EdTech in India has been a hotbed of activity recently. Companies have seen tremendous growth in users across segments. We've had close to $800 million of investment come in just the first half of the year. There's been some M&A activity, notably the acquisition of White Hat Junior by Byju's. We've had a second unicorn emerge with an academy, and new and interesting startups are coming up literally every day. So as an investor, what are your views on the current market, and how has your thesis evolved over the last 3 or 4 years? Dave, it'll be fantastic if you could get us started off.
Yeah, for sure. I think the market's vast over here. That's been our learning. 270 million kids in K through 12, and approximately 38 to 40 million in higher education in India. The spends are in the multiple billions of dollars. I think the key driver for a lot of the spend here is this is an exam-driven culture, and whether it's getting into colleges or schools or getting the right jobs afterwards, there's a lot of academic work that needs to be done to qualify for those exams. So that's sort of driving a lot of the interest. And now that there's internet access everywhere and smartphones, I think that the platform is in place. In terms of our thesis, 5 years ago, it was mainly K through 12, because that's where the dollars or the rupees were being spent in terms of tutoring and college entrance exams. I think now that market is a bit more evolved and mature. And I think there are 3 new markets that we're excited about. One is sort of the K through 8 space. There's a lot of STEM learning coming up, coding, of course, being the first one. But we're seeing a slew of companies, music, art, dance, all sorts of things, maybe primarily driven because all of our kids are at home and not in physical school. The second area is the sort of OPMs, online program managers, equivalents of the 2Us, and the Noodle partners in the US, and there's a bunch of those coming up here. And then the third is sort of professional learning, and there's a bunch of companies in that space. So those are 3 areas that we are excited about. There's lots of questions we can discuss here in terms of regulations and all sorts of other areas, but that's in brief our view.
Terrific. Sandeep, would you sort of agree with that view of how the market's evolving?
Yeah, absolutely. I think Dave's right on where the market is evolving. The way we've seen this, and this is we're looking back now. We've had a chance to take a break, look back during COVID and understand what's happened so far a little bit more. We've been rushing a lot before then, so looking back has not been possible. So one of the look backs is that we are at a point where the Indian EdTech market, I'll just focus on that because of course the market's vast, is really evolving to a point where it is now capturing the attention of the masses, right? It had not done that. So I think that is the first step to making the market meaningful to a lot of people. So if you look at education as a 3-step process, first is driving access or knowledge. Then the access bridge in the test preparation tuition domain has been filled, mostly by Byju's and other companies in the domain. A lot of money has been spent. So there's no longer a question in the minds of the buyers whether there is an opportunity to learn online. That question's been answered very rapidly in the last 2 years. Didn't exist before then. The next question that's going to be answered in the near future is going to be about quality and then relevance. Is this the time where students will then make EdTech the primary source of learning for tuition and test prep? Where do we get when test prep and tuition companies, which are mostly tech-led, end up in a situation where they end up partnering with schools? Because that is the ultimate grail where we get to. And I'm looking forward to some sort of evolution where EdTech becomes blended into education and becomes a whole of education. So looking forward to that, I think we're heading in the right direction. So very exciting times.
Great. Sam, I see you nodding. Do you agree that EdTech needs to become a part of education?
I completely agree with you, Sandeep, on that EdTech being blended into regular education. The point I wanted to make on this question is, all of us in this panel are from India. When I grew up in a modest lower middle class family, 40% of my daddy's income was spent on our education. All right. I think on a per capita basis, as a percentage of income, we are amongst the highest spenders in that thing. We have an affinity to spend for education in this country. And so the way we look at education is anything that can participate in that segment, we'll invest. We invest in classroom education, exams, like you were talking about earlier, and also EdTech, right? To us, it's a full continuum. We've also invested in universities, in colleges, universities, colleges, private colleges, all of it, the entire spectrum. And I look at it as an entire portfolio. We have about 25 deals in that space, right? And what I'm saying is what Sandeep just said, that technology is entering the classroom and the classrooms are moving towards technology, and the line is merging, right? And that is beautiful to see. And what I was telling Zishan the other day, who's a portfolio company of ours, which is Topper, I was telling him that what we could do is to create an iOS, an operating system for running education. We have a unique opportunity to create an iOS or a MS-DOS type thing, which will be an operating system for running education, be it in a homeschooling, be it in a little school, be it in a big school, be it in a college. And that would be the process, the operating system through which everything can go in and out. And I see that convergence happen. Whether it's going to take 3 years, 5 years, 8 years, I don't know. But I one day see schools across the world all operate on a uniform or different, there could be 3 or 4 or 5, but operating systems where they can all share knowledge, and you can conduct exams, you can have learnings, and it'll be wonderful. And it'll increase the efficiency and reduce the unit cost phenomenally. And today's EdTech companies like Baiju and Topper, et cetera, they have a unique ability to go in that direction. So I totally agree that technology is becoming a seamless extension of the classroom, and it should.
Yeah, I'd like to come back to this point on convergence with schools and an operating system. But TJ, would love to get your thoughts next.
Sure. So I remember I go back to 2014 actually, 2014, and when my partner GV and I we led an investment in Baiju classes. At that time, the prevailing question was, as far as EdTech is concerned, was distribution. I think distribution was a unsolved challenge back then. People didn't know how to distribute good quality education products. And since then, the market has come of age. Now there are probably 100 million digital learners, and that number is growing very, very rapidly, maybe 100% plus. So I guess as the market has matured, our lens to identifying, scouting for new opportunities has also evolved. Now we are, more focused on, I'd say less focused on, distribution, more focused on product. And we want to, back companies that have a very unique and compelling product proposition in the market, because distribution, by and large, is a solved problem. Similarly, we are looking for, companies that are trying to create a new category. So I think the most talked about company, EdTech company in recent times has been White Hat Junior, and they've done a stupendous job of creating a whole new category in a short 18-month period. And then finally, we're looking for companies that have global ambitions. And White Hat Junior, Baiju, all these companies are trying to make a dent in the overall global scheme of things. So I'd say that's how our thesis or our view on the market has kind of progressed as education has become more, EdTech has become more and more mainstream in India.
Great. Karthik?
All my peers have covered most of the interesting points around EdTech. There's nothing dramatic to add. I just have a slightly different point of view on, on solving for a complex market like India. Though people are willing to spend a lot on education, I think the learning market is not homogeneous at all on various levels. I think the capability, language, income is just way too fragmented. So I think it's a very interesting market to solve for, but I don't think it's a one-size-fits-all solutioning market. And so there are two sort of branch outs of this shift to power to the end consumer, which didn't even exist till 5 years ago. So as all of my peers mentioned, until you had to go through the gatekeeper, which was either the college or the school, it was a terrible market actually. I mean, all our pre-15 bets looked really bad. I think to Baiju's credit, they cracked distribution like nobody else had. But actually, they succeeded because they reached the end customer. And that barrier finally sort of came collapsing down post-15, especially in India, thanks to Jio. And you have to put it in context, right? If Jio was not priced where it was as it is today, and it didn't disrupt pricing of bandwidth, you would actually be in the doldrums, right? If COVID had hit in 2015, country would have been in bad shape. There are no kids getting online education, not even my kid. They're not paying, $5,000 for a class of over 10 GB of data or whatever. Right? So that's the reality of how quickly we have transformed. I think it's kind of come at in the midst of all the madness. It's an opportune time, but that shift started happening in 16, and the power is shifting further downward. So you can't deny a kid whose parents' budget is 1,000 rupees or 2,000 rupees and not 20,000 rupees the opportunity to learn. I think that's what's fascinating. So the market then becomes very interesting, where you get to premium kind of offerings, but you still democratize education like you never did. And if you can do that in a market which is as complex as India at the price points that you can, then I wouldn't be surprised if we go and conquer the world and build some phenomenal education companies which are global first from India. So that's what I see as the ambition for the next decade from India.
Yeah, no, that's really interesting. And, certainly there's a lot of momentum, but it's obviously a very complex market. So I guess lots more to come over the next few years. But changing gears a little bit, it would be great if you could talk a little bit about what you look for in an opportunity, particularly at early stages where market size might be hard to estimate, where predictability of models is hard to determine. So how do you evaluate opportunities from an investing lens, and how do you avoid potential pitfalls? Karthik, would be great if you could start us off.
Yeah, we are earliest of the lot, I think, on this panel. I think we are far more dependent on conviction, on just really passionate founders trying to build into a very, very large space. We'd be lying, and the founder would be too, if they knew exactly what the product will be 2 years into our funding. Every product looks different from what they pitched us within a year. So we discount the product a lot, despite wanting to be in love with the product, but we're buying into the founder's ability to think of the problem very creatively and try to solve it product first, right? That's our moat when we're playing a very small check. And the second is, despite what you said, I think the reason we get some wrong and we get some right is because you have to take a futuristic bet on where you think the market is going, right? So we did interact with Khare at White Hat and passed on it because we thought it's a very elite product for a market like India. No one anticipated COVID, and no one anticipated 50% of his business to come from the US within 3 months, right? And so it's a black swan which helped him per se, but it helped the entire industry. But those are difficult to read. So broadly, if you're sitting in a normal world without interventions like COVID, you have to have a market view on where you think it's going. And so for us in Unacademy, it was basically, we made 4 or 5 bets then. Only one of them pulled it off. And one of them, for example, was like Class Plus, which we've now bet again now in 2019. But so basically, sometimes if it takes a year or 2 to get over your wounds of a loss, but then you have to recalibrate and actually come and play the same thesis. If you fundamentally believe that the market is going in a certain direction, and it comes back and presents those variables and conditions for you, which is what we've done with the Class Plus, right? But Unacademy, and these are all bets on the fact that kids will have the opportunity to learn off a mobile phone, and every one of them will have high-speed data. And of course, it depends on a lot of external variables, but just like COVID, Geo was like a breakthrough moment for that in India. Without that, all of us would be having an underwhelming EdTech panel out here. So there are market reads and interventions that you have to make.
Yeah. Sam, any thoughts?
I have to completely agree with Karthik. It is the team. I often say I would any day take a average idea with a great team than a great idea with an average team. All right. By great team, what do I mean? Do I mean it's IIT, Harvard? No, not necessarily. It is the obsession that those people have to get to the end line, endpoint. And that's so critical. Evaluating this market, like Baiju, when they got off the ground, they actually, in a way, created the market, right? The market didn't exist in a well-formed way. They led the market, others have now come in, and they're all refining it in different ways. So the thing is, and that's going to happen again and again and again in a country like India, where things like Geo come in and they disrupt entire communications infrastructure, make it accessible to everybody in far small places. So more and more white hats will have to happen, and they will happen. So the way we view it, and we have the luxury of doing this, which when I used to run funds, I didn't have that. The wounds that Karthik's talking about, I still have lots of them. I feel them every morning when I wake up. I have lots of them inside. But in Brand Capital, we we invest across a portfolio because we have an opportunity to invest multiple companies. So as a result, we are able to view it as a portfolio within education itself. Some win, some lose. So we have a large amount of media capital to deploy. So we can take that portfolio view. So we deploy across all companies, and some don't win. But what we view it as is developing the entire ecosystem and lifting it. And the ones that win, they win really well. So we make money at the end of the day. So I view the team as the most important thing to bet on when the market's not fully visible and clear or easy to evaluate.
Yeah, yeah. Dave and TJ, would be great to hear the Lightspeed and Sequoia perspective on the investing lens. Dave?
Sure. When it was K-12 that we were looking at 5 years ago, I think willingness to pay, believe it or not, was a big filter for us. There were n number of companies that were out there and were not getting paid, and Byju's figured out distribution, but also how to price something and get paid for it, which was crucial to their success. We would also look at that time for a brand that had existed for a while. We believe that in education, it takes longer to build a brand than in many other sort of internet categories that we look at. And then finally, we were looking for a pedagogical approach that was not just a copy of an offline model. It wasn't a recording of a professor at a whiteboard, but it was more of something that used internet concepts of some kind, whether it was sort of communities coming together online, whether it was sort of testing and learning from how students took a test to then give them the next question, and so on and so forth. So we were looking at something that was different and could not be done offline. I think fast forward to today, as we discussed, that K-12 segment is more filled up. But I think where we're getting to now is areas which are more in the gray area between unregulated and regulated. K through 12 tutoring was completely unregulated, right? So there was no issue there. But now we're getting to online degrees, which is regulated in India, and there's been a change in that in the last year itself. We're looking at jobs. There's a close association with in that area in India, probably more so than many other countries, where higher education is very, very much done because people want to get that higher paying job, and professional learning is for improving a person's income. And so we're getting into these regulated areas, job areas, which are more difficult, I'd say, to navigate than pure K through 12. The final thing I'll say is that we talked about, Karthik and Sam talked about founders. One clear difference we're seeing in founders between 5 years ago and now is 5 years ago, they'd all been teachers for whatever reason. I don't know why. People had been teachers for 5 years, 7 years, 10 years. Byju himself, I believe the founders of Vedantu had been teachers, and so on and so forth. I think now what you're seeing, the types of founders you're seeing coming into the market are technology founders more than educators. On the whole, I mean, it's not a blanket rule, but I'm seeing more of general founders coming in, which I think is good for the education ecosystem, but that is not a filter for us anymore. It's become more a general sort of entrepreneurial area for anybody to enter into. So those are some of the differences we're seeing and some of the filters we have. TJ?
Thanks, Dev. So first of all, let me tell you, I don't believe that any market education category in India is small. I think that's the biggest myth. And we are, all of us on the panel have learned it the hard way by making tons of mistakes. I remember when we were investing in Byju, we thought in 2020, Byju will have 1.5 million, 2 million kits with $100 price point. And there are several times of that today. So there's, one couldn't have gotten it more wrong. Second, in terms of what we look for when we're meeting early stage founders, I would say two things. One is authentic insight. So there are many founders who have done a lot of research or have gone through a pain point, and their level of authenticity to that insight is very high. And we like such founders who come up with unique insights into the market. And then second is just nuancing the emphasis on founder a little bit more. We look for founder market fit. Now, let me elaborate on that a little bit. Let's say if there's a established category, let's say K-12, for example. So in K-12, the distribution problem has been by and large solved, and therefore the sharp end of the wedge is the product. And hence, in those, for a K-12 idea, we'd look for a founder who's a product, who has a product mindset, who's a product first type of founder, who is special when it comes to building product. On the contrary, if you're building a new category, let's say kids coding, which Karan is building, we look for a founder who's more of an evangelist, because in order to create a category, you need evangelism, to rally people, rally consumers around the idea, around the product. So we look for a more evangelical type of founder. And third, if there's a category where distribution pipe itself has not been established, then you're looking for a hustling founder, like a hacky founder who can, like Gaurav Munjal at Unacademy is probably the best example. He created this massive distribution on top of YouTube with 200 million odd views every month, and then close the loop by monetizing the top of the funnel through a subscription-based product, which is working very well. So yeah, product founder market fit is very, very important, especially in early days of category creation.
Yeah. I think all of you talked about founders, and they've made this interesting point about founders now coming from tech backgrounds and possibly even consumer backgrounds into EdTech. Sandeep, what are your thoughts? Are you seeing that same pattern emerging? I know you invest outside of India and Southeast Asia as well.
Yeah, I'll speak of three things and really quick, because I do want to cover one point from the previous conversation, Cami, if I may. I'll be really quick about it. I think the one, I really like, TJ, what you said, and it goes down to us, into the founder having authentic market or technical insight. One of those two has to be very clear. As you said, distribution's played out. But what we also realize is how does that founder's vision fit with the firm's vision? If the founder is looking for, like, theoretically, it's an evangelical founder or the hacky founder, like you said, TJ, they would need tens and tens of millions of dollars to create that, because they will try and fail. They'll burn a bunch of money. They will look at marketing and creating a lot of air cover. Can a $50 million fund support that, right? You've got to be careful about it. So if you are a small fund, you don't want to really be looking at a lot of evangelical founders necessarily, unless you get lucky and the next or third round doesn't dilute you completely. So you've got to be careful. You're just supporting charity in that case. Second thing you need to keep in mind is if you're working with a smaller fund, then you're possibly more suited for a product-led founder as a company, as a DNA. You don't want to take too many chances with founders who are all binary logic, where they will take you to the edge every time. So I think those are things to be played with, and that's things we keep in mind, and that limits the circumference of our interest. But at the same time, fully agree with Dave that the number of founders who have now started coming out in the last year, particularly, are definitely more tech-led. And they are putting pedagogy in the back. They're using AI more, they're using more creative thinking around engagement. They're better at understanding some of the core metrics of customer acquisition, much better from the get-go. So I really like that. I think they are also, some of them are brilliant in setting up academic councils, which they know they're not very strong at. So I think we're heading into a nicer direction where we'll have a lot more founders entering EdTech.
Yeah, I mean, it certainly reflects a certain maturity in the market, which is great to see, and refinements in ideas and so on. But I'd like to spend some time in our next section talking about Byju's and Unacademy, the two EdTech unicorns, and seeing that more than one of our panelists have invested in one or both of these companies. What are some of the things that they have got right, and what possible lessons exist in terms of business models or monetization or even their financing journey? TJ, you've invested in both companies. Would be great if you could share some insights, and would also request Dave and Karthik to weigh in.
So I'm happy to talk about Byju, and then maybe Karthik and others can talk about Unacademy too. I think for me, Byju has obviously gotten many things right. Dave is here. Dave and us partnered with Byju together. But I think fundamentally, I think it's all about first principles thinking. So back in the day when Byju started, the conventional wisdom was especially as far as digital goods or digital products are concerned, the conventional wisdom was you need to have a digital distribution. So people would invoke examples of Netflix and Spotify that have digital products and digital distribution, and the conventional wisdom was that that is a scalable way of building businesses. But Byju has totally bucked that trend. And the fundamental insight there was, an average Indian that doesn't know anything about video-based learning, anything about Byju's, is very unlikely to buy a $200 or $300 product purely online. And therefore, the way Byju architected its GTM was, I would say, marketing driven but sales led. So there were a lot of inside sales people, telecallers, as you may call them, who would call up parents who had shown an interest by downloading the app, and the kids were engaging on the app. So they would call up the kids or the users who had very high engagement on the app, and literally educate them about the product and the benefits of the product. So there was, again, to the point that I was earlier making, there was a certain degree of evangelism involved in selling the product and in creating this category, which now obviously seems very mainstream, but back in the day was very niche. So I think, at that time, there were many questions around. In fact, when we invested, this is 2015, mid 2015, Byju didn't even have a mobile app, and the way he was selling was he would organize these, get-togethers in these massive stadiums, and 5,000 people would turn up, and then he would talk about his pedagogy, which was very unique. And at the end of this session, which is 2 to 4 hour long session, people will end up buying the product, which was nothing but a SD card that you could fit into your tab, your iPad or whatever, and use the product. So I think just thinking first principles and designing products or services for India, I think is probably the biggest learning that we have had from the Byju experience.
Dev or Karthik?
Okay, go ahead.
Yeah. So, Unacademy, as you know, the story now is well told. He kind of started from him playing around with a YouTube channel all the way back in 2010. And if you've heard the story from Gaurav, it never left, that bug never left him. He went through a startup in between, sold it, worked for the other company, and he knew there was something magical in there in terms of how many people wanted to learn from a unique sort of content that was available on YouTube. And so he kept feeding that machine, and he kept seeing that there's more and more demand for it. And he realized that it's probably at an age group where it's conducive for someone, 15 years to 20 years of age, perhaps, who are sort of familiar with, absorbing content on video, right? So the entry point for most Indians is YouTube for video content. And so he started with the idea that I want to democratize education. So as I said, the product was not, there per se beyond the YouTube channel. But what he realized, I think, is that you can keep creating various types of content and get a lot of free views, and people will love taking content for free. But eventually you got to make it seem like it's going to be game changing for you. It's result oriented, it's goal oriented. And I think the insight there was that you have to therefore have live classes. You got to have the best teachers. You got to have the best product. You got to make it feel like they're part of the experience that TJ spoke of, which Byju's created in a stadium. You got to be able to create that same effect, but on a video screen. And he's very product obsessed, like all good founders are. And so he continuously iterated that product in such a way that the students felt like, I don't need to leave home, right? I don't need to go to quota. I don't need to go to coaching class. I'm getting as much value and quality out of a computer screen. And miraculously, the bulk of these people actually, the initial part, thought through a mobile phone and consumed through a mobile phone, which is fascinating for me. If you told me to learn off a mobile screen, I would find it very challenging. But if you have a 16-year-old kid who has no other options, they're going to do it. And so 70%, at least, I don't know the numbers now, but even as early as a year ago, 70% of Unacademy's customers were tier 2, tier 3 city or town customers. So they're the ones being denied quality education. City kids probably are relatively spoiled. So I think the aha is that, when you do give a great learning experience, people will pay for it. And then his ability to then package it and consume whatever you can in a 1 year. Your spectrum for prep is about a year to 2. And he focused on prep. He kept building there, and he built market leadership. So great story all in all, to where he's led to so far. And of course, he's ambitious to try and solve it all along the education spectrum right now.
Dave, any thoughts to add?
Yeah, I just wanted to net out 3 learnings from Byju's that we observed. One is they proved value for money. In India, the entrance of IKEA in the furniture category, Decathlon in the sporting goods category, in the US, Walmart in the retail category are value for money categories. And that's very much the mass market in India. So anybody wanting to enter here, I think has to go for those profit pools as opposed to the premium profit pools only. I think those tend to be small markets. I think he proved value for money. And even at the pricing, he was at $100, as TJ said, or $200 now. The comparison is not to what people are paying for school or something else. The comparison is to what people are paying for tutoring, including non-consumers. The big thing he's done is brought in non-consumers into the tutoring market. So that's one, value for money, like IKEA, like Decathlon. The second one is sell education, not just market it. I think in education, perhaps because it's a nonprofit category in many parts of the world, people are a bit loath to sort of be aggressive about selling. He sold it. He invented this inside sales model in India that, I think has been now used by lots of different companies. I would say even in the US and China, there is not much of this inside sales, and they've learned from what Byju's has done. So inside sales was the other one, sell education. Don't just assume people will come to your website. And the final thing is the international applicability. There are a few advantages to companies coming out of India, we believe. One is content production is cheap. You can do that at scale in India. The second one is Indians, for whatever reason, have got a brand in math and science. So you can leverage that to some extent to go international. The third is we've got an abundance of teachers who are very badly paid. And so for them coming online and teaching online, they can really increase their income levels and be really loyal employees and really good teachers. And the final thing, which is, I think, the basis of any good company, you've got a really large domestic market that you can hone your offering in and then take it abroad. So there are these few things that I've learned from Byju's, at least, that I look for in some of the other companies that we're looking at.
One thing that I'd like to add, which is probably a common learning between Byju and Unacademy, is the understanding of a product. Like, what is the product? What is the education EdTech product? Oftentimes, people like us who are too obsessed with tech think tech is product, and product is synonymous with tech, and vice versa. But for a education tech product, it's an amalgamation of the teacher, the curriculum, and the tech, which is the mode of delivery. And one big commonality, while Byju and Unacademy have diametrically opposite GTM motions, but go-to-market motions, but one big commonality is just the quality of teachers on these platforms. Byju has some of the best K-12 teachers, including himself, that India has. Unacademy has onboarded maybe 1,000+ teachers, the who's who of IIT tutoring or UPSC test prep and so on. So the learning here is that we should not overlook the ed part of tech. There is a reason that ed comes before tech. So it is education tech and not tech education. So just keeping an eye out for that is something that we have learned from both these experiences.
Yep, great. And a couple of you alluded to this, but do you think the India market has depth for many more unicorns to emerge in EdTech? Or is K-12 and test prep, for example, already getting crowded? Sandeep and Sam as well, would love to get your views as investors in Topper. What are your thoughts?
So, okay. Yeah, sure. Thanks, Sam. We think that the market in India is going to go through multiple phases. The ultimate playing out of K-12 and tuition test prep domain will be when everybody, whoever is playing in the domain, will say that they've got the best results. We're not there yet. See, when you walk by the lanes of any city in India and you've got all these tuition centers talking about the winners of their students who've done well in this test or that test, that's the ultimate game where we will end. And then there'll be more. But I think In this process, there will be at least a couple more unicorns created in this same domain. And with the convergence of schools and EdTech, current EdTech taking place, which is inevitable, I think the advantage that a lot of the larger companies have in terms of cost of acquisition, that's the only way that advantage can be managed by smaller companies. There is no other way left anymore. You cannot reduce it by buying better ads on the net. You've got to play a lateral game. So that'll be played. So as that occurs, I do believe that there'll be a couple of other companies at least which will play out. And we shouldn't forget that some of these players who are currently mostly ed-led and not ed-tech, and plenty of those in Kota and Delhi and other parts, there will be some players who will want to extend their arms into ed-tech. And they are close to, in their own might, semi-unicorns. Their market caps are halfway there. So they don't need so much more to go from where they are to being unicorns. So I think there's a lot of room left. And I now think the turf wars will shift from in the cloud to an amalgamation of cloud and the ground. So there'll be many more companies to come over the next 5 years, I think.
Sam?
Sandeep, Kami, I'm actually more bullish than Sandeep is. I think we are in the first or second inning of the match. Baseball analogy, not cricket. I think it's very early, very early. I'll tell you why. And I've lived in 3 different continents in my life so far, so I have some knowledge of looking at different places. India has always had a mild obsession with education, whether it is needed or not. It's so common. I don't have, most of my friends have 2 or 3 degrees, whether it's needed or not, we just have it. We just have a mild obsession with education, and we will get over-educated. We will invest in it. And it's there amongst Indians in the United States. I've seen Indians in the UK and Indians outside India as well. Because education historically has been a passport that has taken people from middle class to an upper class in one generation. And that testimonial is so strong that it lasts multiple generations beyond the generation that it lifted. That is one thing. So meaning it's a very rich early adopter market, in a market where new companies can start. You know what I mean? People are willing to spend a lot of their income on education. So they could be, it's a rich market where more can start. That's one thing. Second thing is the demand is there. People are willing to pay a higher percentage of their income for education. The third, I see leaders like Baiju. When I'll tell you in the earlier question, just adding a little bit to the earlier question, what I really admire about Baiju that I see, I don't have that much knowledge about Unacademy, but Baiju, we made multiple investments and we worked with them from early on, is that they truly thought massive and big. They did not think small. They thought massive and big, and that's very, very critical. And the one thing that I do not see still, many Indian promoters, owners, is acknowledging that we don't have skills and competence in a certain piece, and we acquire a company. And when we bolt it onto our distribution, once we have built it, and we scale. This is what Amazon did so well. I could see Baiju do exactly that, and they are doing it. White Hat, the other acquisition, and so there is somebody like Baiju. I see a potential for them to become multiples of where they are today and go globally to different markets. That avenue is there, but within India itself. With mobile going and providing deep parts of India, small parts of India, geo combined with it, a lot of bandwidth, I see this spreading very, very deep. So I think the market, we can't truly evaluate the market size today. I think it's multiples of what it is today. For example, last year, we invested in a robotics training company. All this company, and they have 12,000 students. And they have 10 crores in sales, and they were profitable when we invested. It's quite shocking. 3 youngsters, and they teach kids how to make robots, essentially. And parents are getting their kids from school and bringing them to the centers where the kids are playing with little robots, and they're making their own and learning. I was shocked to see it. that it's a huge amount of effort for the parent to do it. So it is so ingrained in so many layers that I think the market is a fraction of what it is. And I think there are going to be multiple companies. Now, it's not going to be a winner take all for sure in education in India. We are going to have multiple guys, but it's entirely possible that somebody like Baiju or Topa, who can scale up, and they can have multiple other companies under their umbrella, and they can offer them as, you know, a warehouse with multiple brands that provide different things under their mother brand. So I see multiple ways this thing can grow. We are very, very bullish about this section.
Sure. And I think on that note of thinking massive and big, we're just about out of time. But this has been a wonderful discussion, and many thanks for your time and great insights. And on behalf of the panel, thanks very much for joining us.